Okay, so yeah, it's been pretty hard to miss all the craziness going on in the Indian stock market right now. It's
Yeah.
like everything's been just kind of a little shaky
Yeah. Yeah.
lately. So on this deep dive, we're going to really sort of unpack what's going on, and more importantly, why should it matter to you?
Yeah.
We've got a bunch of information here, and we want to look at not just the cold hard numbers, but the insights into how it's really affecting people.
Right. Their finances,
Yeah.
their futures.
Right.
And, our goal isn't to give you investment tips, but to really understand
Right.
the reasons for this volatility and how it affects the broader economy
Exactly.
and ultimately your financial well-being. We really want to understand the why behind the headlines.
Right. The why behind the headlines.
Oh,
Okay.
yeah.
So let's dive right into that. Why? What is triggering this downturn in the Indian stock market?
Well, a major element seems to be just global uncertainty.
Okay.
Think back to the trade disputes started by the U.S., imposing tariffs, right, and, sparking a trade war.
Right.
These global tensions create a climate of fear
Yeah.
and make international investors,
Sure.
including those with holdings in India, very cautious.
Oh, yeah.
You know?
Nobody wants to lose money.
Exactly.
Yeah. So this caution translates into a specific action, doesn't it?
Yeah,
We've seen reports about FIIs pulling their money out.
right.
So can you explain what's happening and the scale of this?
Certainly. So when global economic conditions appear unstable,
Right.
FIIs often prefer to move their capital to
Yeah.
what they perceive as safer markets.
Right.
This can lead to significant outflows from emerging economies
Uh-huh.
like India. And so the numbers that we saw indicated that 34,574 crore worth of shares
Wow.
were sold off by FPIs in February alone.
Wow. That's a lot of money.
That's a considerable amount of investment leaving the Indian market.
Yeah. So beyond just the money leaving, the value of the Indian rupee itself has been under pressure.
Absolutely.
How does that factor into this?
So the rupee has weakened and hit a low of 85.80 against the US dollar.
Okay.
And for you, the listener, this has a direct impact because it makes imports
Right.
more expensive.
Right.
India is heavily reliant on imported crude oil, for example.
Right.
So a weaker rupee means we're paying more for essential energy.
Got it. And we also saw that the price of Brent crude oil had climbed to around $81 a barrel.
Right.
How does India's position as a major oil importer amplify the effects of that high price,
Right.
combined with a weaker rupee?
Well, being a major oil importer, India is particularly vulnerable to rising crude oil prices,
Okay.
especially when coupled with a depreciating rupee.
Right.
It creates a double whammy,
Yeah.
significantly contributing to inflationary pressures within
Right.
the Indian economy.
Okay.
Higher oil prices translate to increased costs across various sectors, from
Okay.
transportation and manufacturing to agriculture.
Yeah.
This fuels broader economic anxieties and can further erode investor confidence.
So it's this like interconnected web of global trade issues causing investor unease,
Right.
leading to capital flight, a weaker currency making crucial imports more expensive, and rising energy costs,
Right.
stoking inflation.
Yeah.
Yeah, it paints a clear picture.
It does.
Of these pressures now, is this downturn affecting all parts of the Indian stock market equally? Or are some sectors feeling it more?
Yeah, that's a good question. And the impact isn't uniform.
Okay.
We're seeing specific sectors experiencing more significant declines.
Okay.
For example, IT stocks,
Okay.
including companies like Persistent Systems and Tech Mahindra,
Right.
reportedly face losses of up to 4.5%.
Okay.
This suggests that industries with strong ties to the global economy or those sensitive to investor risk sentiment might be more affected.
Interesting. And it wasn't just the big name companies taking a hit,
Right.
right? I recall reading that mid-cap and small-cap stocks
Yeah.
were also significantly impacted.
Uh-huh.
What does that tell us about the breadth of this downturn?
Yes, the downturn appears to be quite widespread, with mid-cap and small-cap stocks also experiencing significant declines.
Okay.
This indicates that the nervousness isn't isolated to just the large-cap companies
Okay.
that tend to dominate the headlines. It suggests a broader market correction
Gotcha.
where investors are becoming more risk-averse across the board.
Okay. And when a major index, like the Sensex,
Yeah,
sees a sharp drop in a single day,
Yeah.
say like a 1,000-point fall,
yeah.
what kind of psychological effect does that have on overall market sentiment?
A sudden and substantial drop like that can have a profound psychological impact.
Okay.
It creates a sense of fear and uncertainty.
Yeah.
Even investors with a long-term outlook can become anxious.
Right.
potentially leading to more selling pressure simply due to the fear of further losses.
Oh, wow. So just kind of like a snowball effect.
Exactly. It shakes the overall confidence in the market.
Yeah, it sounds like this ripple effect of nervousness extends beyond just the individual investors managing their own portfolios.
Absolutely. This kind of market volatility generates anxiety throughout the financial system. Okay.
Affecting everyone from brokers and financial advisors
Right.
who are dealing with worried clients to salaried employees who see the value of their retirement savings diminish.
Right. It's like this fear just permeates everywhere.
It does. It has a far-reaching impact.
Yeah. And that brings us to what is probably the most critical aspect for our listeners.
Right.
How does this stock market downturn directly affect everyday people and their financial lives?
The most immediate consequence for many individuals is what we can call wealth erosion.
Okay.
A significant portion of the population invests in the stock market through mutual funds and direct stock holdings. When the market declines, the value of these investments decreases.
Right. And to make that really concrete, we saw an example of a middle-class investor who might have diligently invested 5 lakh through SIPs, systematic investment plans, and suddenly sees their investment value drop to 4.5 lakh.
Right.
That's a very real and disheartening loss. Exactly. It's not just abstract figures on a screen. It represents a tangible reduction in their hard-earned savings.
Right.
And this can be particularly concerning when you consider that many people invest with specific long-term financial goals in mind.
Right.
Such as funding their retirement or their children's education. A market downturn can create the unsettling feeling that these important dreams are being jeopardized.
It's that sense of insecurity about the future, right? And I can imagine that fear can lead some people to make impulsive decisions.
Precisely, the emotional response to seeing your investments lose value can trigger panic selling. Individuals might decide to withdraw their investments to prevent further losses, but this often happens at precisely the wrong time.
Oh, no.
Locking in those losses and potentially missing out on future market recovery.
So like a double whammy.
Yeah, exactly.
And the impact isn't limited to those who are directly invested in the market, is it?
Right.
The broader economy feels these ripples too.
That's correct. Consider the startup ecosystem, for instance. A downturn in the overall economy and the stock market can lead to reduced funding opportunities for startups.
Right.
Hiring freezes, and even an increased risk of job losses within that sector.
Wow.
So even if you don't directly own stocks or mutual funds, these wider economic consequences can certainly affect your job security and overall financial well-being.
So given this landscape, what are some potential steps individuals can consider in navigating these uncertain times?
The first and most vital piece of advice is to resist the urge to panic. For those investing with a long-term perspective, reacting emotionally to short-term market fluctuations can be detrimental to your overall financial goals. Patience is often a crucial virtue in navigating market cycles.
Right. Trying to time the market is pretty much impossible, even for the most seasoned professionals. What about strategies for managing risk in a portfolio?
Diversification is a cornerstone of risk management. It involves spreading your investment across different asset classes rather than concentrating them in a single area like equity. Depending on your individual circumstances and risk tolerance, this could include allocating a portion of your portfolio to debt funds, gold, or even real estate. The idea is that different asset classes may react differently to the same economic news, potentially cushioning the overall impact of a market downturn.
And for those who are relatively new to investing or are feeling particularly anxious during this volatility, what would be your recommendation?
Seeking guidance from a certified financial advisor is highly advisable. Especially if you're feeling overwhelmed or unsure about how to proceed.
Makes sense.
It's best to avoid making investment decisions based on unsubstantiated tips or hearsay. A qualified professional can help you assess your individual risk appetite, understand your financial goals, and develop a tailored financial plan to help you stay on track.
So it really comes down to having a clear understanding of your own financial situation. Your risk tolerance and the specific reasons behind your investment choices.
Precisely knowing what you're investing for, whether it's retirement, a future home purchase, or another long-term goal, can help you maintain a more rational and less emotional perspective during periods of market volatility.
This whole situation seems to offer a broader lesson as well, almost a philosophical one. About the nature of markets and financial cycles.
That's a very insightful point. The stock market's inherent volatility can be seen as a powerful illustration of impermanence. Just as we experience periods of growth or profit, we will inevitably encounter downturns and losses.
Right.
It's the cyclical nature of financial markets.
Yeah, it's that whole what goes up must come down kind of thing.
Exactly.
And perhaps it serves as a reminder that our overall sense of well-being and self-worth shouldn't be solely dependent on the performance of our investments.
Absolutely. While financial security is undoubtedly important, it's crucial to remember that true peace of mind can't be bought. Cultivating a balanced life where your self-worth isn't exclusively tied to your investment portfolio is vital for long-term happiness and resilience.
It encourages us to take a step back and focus on the aspects of our lives that are more enduring than the fluctuations of the market.
Exactly. Developing a sense of gratitude for what you have, focusing on your core values,
Right.
and engaging in positive actions in your life can provide a sense of stability and perspective, even when faced with financial uncertainty.
So to summarize, it appears that this recent shaking in the Indian stock market is being driven by a complex interplay of global economic headwinds and domestic factors.
That's right.
And it has tangible consequences for a wide spectrum of individuals.
Whether you're directly participating in the stock market or not, the overall health of the economy and the performance of the market have implications for everyone.
And the key messages seem to be the importance of staying informed about what's happening,
Yeah.
maintaining a calm and rational approach during volatile periods,
Right.
and adhering to a well-thought-out and diversified financial plan.
Precisely to emphasize a critical point, making impulsive selling decisions based on fear is generally not a sound investment strategy.
Right.
For long-term investors, patience and a disciplined approach are often the most effective way to navigate market cycles.
So as you navigate this period of market fluctuation, remember that these cycles are a normal part of the financial landscape.
Right.
This current downturn, while potentially unsettling, is part of that natural ebb and flow.
Yeah.
Perhaps this is a valuable opportunity to reflect on your own long-term financial philosophy.
That's a great point.
And how you aim to respond to these inevitable ups and downs.
Yeah, I like that.
Thanks for joining us for this deep dive.
Thank you.
We'll see you next time.
See ya.
Bye.